This is how I'll use options to profit from a very volatile market, example, cryptocurrency. Now you can see from the chart that Bitcoin is an extremely volatile asset. Instead of purchasing Bitcoin, we can use options on Bitcoin ETF. An example is BITS. It tracks Bitcoin movement while it's not 100% accurate in tracking, but what we want is that this particular ETF moves when Bitcoin moves. Right now, we do not know whether Bitcoin is going to go up or down, so we can establish an option strategy called the Straddle. What it does is, BITS right now is at around $70 and we can purchase a 70 call and a 70 put. And if you look at the risk graph, no matter whether if Bitcoin goes up or down, we will make a profit. The risk comes when Bitcoin does not move at all. But if you look at Bitcoin and all the news surrounding it, it is extremely volatile and the chance of it moving is very high. Another thing to take note is, because we are purchasing a call and a put, we are paying a premium of $2,240. This means that this is the maximum loss that we can incur. I like this strategy because there's limited risk. No matter whether Bitcoin moves up or down or do not move, the maximum loss I can make is 2,000 plus. However, if Bitcoin goes up, there's unlimited infinite profit. And if Bitcoin goes down, I will make profit as well. In order for me to profit, Bitcoin needs to move a certain significant amount. And as options investor, we need to take note of volatility. Because volatility, when it increase or decrease, affects the price of the premium. So when we enter a straddle trade, we make sure that the volatility is low. This makes us pay lesser for the options premium. And when volatility increases, we make even more profit. To learn more about options, follow this channel and click on the link for more free resources.